and chart surgery.
Yeah. Morning, everybody. We are Signal Centre Talking Bull. I'm Joe Neighbour, joined by Steve O'Hare. Good morning, Steve.
Good morning.
How are you doing?
I'm doing very well, thank you. Sun is shining.
Yes, indeed it is. Okay, let's get straight in then. So, news-wise, bit of a slump in overnight activity. There was concerns about inflation and tech stocks taking a bit of a bashing. So European stock futures are all pointing lower today, following suit from Asia last night. Inflation anked and stoked by surging commodity prices looks to be the likeliest cause for the sell-off, according to the news I've got today. Also, the Nasdaq is trading at more than 5 times annual revenue, so clearly that's taken an impact as well. Also notice that the bears are increasing their bets on Nasdaq on the short side, with the short interest on the biggest ETF tracking the Nasdaq 100 increasing to its highest level since August last year. So maybe a bit of a telling sign there. So yeah, that seems to be sort of front and center. We've obviously had this hack on the Colonial Pipeline. Looks as though it may have been Russia. Although President Biden stopped short of blaming the Kremlin for the attack on Friday. He seems to be quite diplomatic about these things, doesn't he? I was just thinking this when I was reading it this morning, how we don't hear much from Joe Biden compared to what we've become accustomed to with the previous president. I don't know if that's a good or a bad thing.
I think it's a good thing in my book, but yeah, the jury's still out. Maybe it's a silent killer instead.
Yeah, maybe. Okay, so let's get stuck into some charts then. So I'm going to go with FX to begin with, just because I don't think it's going to be as exciting as what Steve's going to be able to show us on the metals and index front. So starting off with dollar index, I did have a sort of a corrective channel going on here, but it looks like we've breached that over the last couple of days, so I'm going to remove it. We've broken below support here that we posted on the 29th of April at 90.42, posting this big old candle a couple of days back. Attempted to post a bit of a hammer candle yesterday, which may signify a bit of a reversal. I think if we have a look lower down at the 88.6, yeah, we've got some support forming there. The 88.6 really is a bit of a sort of a last chance kicker on these things, so I'm not overly excited about that. But if you go from the lows on the 6th of January to these highs on the 1st of April, then it's bang on this 78.6% level. So maybe some support. It's a little bit difficult to say. I did notice actually on the intraday charts that there may be a little bit of a bottom forming. So if you're looking for something purely on an intraday basis, then there may be something happening here. If we can break above these resistance levels that have formed at 90.34. But clearly the overall trend is bearish. So any move to the upside there is likely to be short-lived and therefore highly speculative. So flipping that over to the euro dollar, which is often the flip side of the dollar index. As you can see, we posted a bit of resistance or a bit of a reversal candle yesterday. Not enough to turn around what we saw over the previous 2 sessions. And in terms of the volumes, they weren't particularly much to write home about. So it looks as though it's more of a case of buying dips in the short term, maybe towards the lower end of the channel, before a continuation higher towards this resistance here at 122.42. Cable looking really strong yesterday, big move to the upside, breaking out of this range that had been preventing the price from moving in either direction between 136.70 to 140.004. We are maybe seeing a test of the reverse side of this broken channel, so we'll wait and see if that provides any resistance. The next resistance above that is up at 142.41, which is this previous swing higher from the 24th of February. But overall, sterling looking pretty good indeed. What else have we got today? Let's have a flick through here. So Dolly Yen still probably my preferred play against the dollar on the long side, if that's where you want to go. Looks like it's found support on the trend line and potentially moving higher. Next level to target on the upside is at 110.96. Dollar Swiss, no sign of that slowing, continuing to trade within this corrective channel here. Overshot the 61.8% fib level. A couple of attempts at reversal candles forming over the last couple of days or so, but needs to do a little bit more before we can get any sort of excitement about a bounce in that. CAD against US dollar making 44-month lows. So no sign of that slowing whatsoever. Looking really quite ugly actually against the US dollar, and that's obviously been driven by these higher commodity prices. Pretty much it, I think, on the FX side of things. Not probably as exciting as what you're going to hopefully show us now, Steve.
No, I'd like to think I can try and get something out of yesterday's trade ideas and analysis. I'll start with the indices and look really at the 4-hour time frame. For me, this is just giving us a little bit more indication of what really we're facing after this reversal in fortunes for the indices. FTSE, this has turned around quite quickly. Obviously, we got a really nice evening star formation on the 4-hour chart, and this led to a really decent sell-off, which is accelerated this morning. The levels to watch, though, on the downside, we've got another 50 points to go before we find what I expect to be some decent resistance coming in just above the 6,900 level. Also, looking back, we've got this really decent upward trending support line below that. So even a break of 6,900, I expect to find some support at 6,870. In terms of what we expect from a retracement from this impulsive move higher, we've got levels of support coming in the 38.2, which is a normal reversal. Also comes in around this double bottom type formation that comes in at, oh, I hate that color. Let me change that blue color. I don't know why they invented that. Much clearer, 6,838, 6,840. So you know, still medium term, still bullish of the indices. That hasn't changed. We're just getting a correction. Looking at the DAX, we were looking at this head and shoulders formation, but we did say it was slanting downwards. Not a great one, not a clean one. So let's take that out of the equation, because we did sort of spike higher and take out the right shoulder. But for me, this is very likened to a double top formation. Didn't quite get up to the previous swing high, but it still for me counts. Now the main level to watch would be a break of the neckline. We've still got a bit of a way to go, but yesterday we were 700 points away. Today we're only 200 points away from this key support level, and I think, as you can see, we'll see a little bit of maybe of a vacuum down to you know, the lower levels between 14,827. The next real support doesn't come in till about 14,150. So again, we can draw some take it from this impulse higher, maybe down here, draw it up to there, and 38.2% resistance comes in at 14,653. But we've just touched quite a reactive level, where we've seen it 1, 2, 3, 4 times. It's reacted. It did spike through and then recover, but then did have a pullback to here. So for me, the 15,073 level is a little bit of an early warning sign for the DAX. If we manage to break through that this morning, this could lead to an extended sell-off. Looking at the Dow Jones, really, obviously, all-time highs yesterday, but we've got this nice, really bearish engulfing candle on the 4-hour chart, which is obviously significant. Probably the swing low of the reaction higher from 34,463 is really the first level of support that we'd expect. We'll also get upward trending support coming in this wedge formation that we've got going on, but not for a lot lower. So on the back foot this morning, the Dow Jones, let's wait and see what the US brings this afternoon, whether they can recover this. But it does feel like there's decent momentum in these sell-offs. Now, obviously, the Nasdaq, the tech sector, we've been talking about a lot. and we saw this double bottom formation, which would look to have a measured move target up towards just under 14,000, but it ran into a bit of a roadblock around this previous swing high level. Let's turn it to red so we know it's a bearish line, and that came in at 13,846. Didn't manage to breach that resistance level and reacted aggressively lower, again going into the close, or yes, even from the start of yesterday's trade. The Nasdaq has been under pressure and accelerated again overnight. It's broken down below the 13,390 level, which was the previous reactive support level, and we've moved all the way down to the 50% Fibonacci retracement from the impulsive move higher. So reacted off there slightly, but I think this previous support will act as resistance now. So wouldn't be surprised to see the market, if it does manage to get up to there, then having another reaction lower. 61.8 and 78.6 for me are probably more important, because the tech sector has had this pressure where the other indices have managed to sort of avoid that. The S&P, don't know what to really say about this. A little bit of an expanding formation, but it has. We drew a sort of a resistance line in now, joining these two spots. That's a potential resistance, but just a real disappointing move lower again. The real level of support I'm looking at is about 50 points lower, coming in at 4,110. And that's where I expect buyers to come back in. So as I say, just a reaction on the downside, but wouldn't read too much into it just yet. If we manage to get a break of 4,100, then I'd say, hey, look out. We could be heading down towards the 4,000 psychological level. Commodity indices like the Aussie 200 have fared a little bit better, although they still have been dragged into this sell-off. So looking really at from this impulsive move higher, here we've got sort of decent support coming in, and I've joined this line here, this line here, this line here, and this line here, and we're testing that level. It's coming in around about 7,050. Again, the 38.2% fib retracement is 6,980. So still potential for further corrective move lower, but really wouldn't be too concerned about this until we get a break of around about 6,900. Really, this swing low, that would really concern me. Obviously, we had a shooting star there on the 4-hour candle. That was the first sign, a couple of shooting stars, bit of indecision, and then bang, it's gone. On the Nikkei, it's a little bit of a level to watch for me. We've seen the reaction support from this little bad boy here coming in at 28,300. Once, twice, three times a lady. Looking for a fourth time. A break of there, and we really have got some trouble on our hands. The China 50. I think it's done. I'm really sort of concerned about this. This didn't manage to. Here we go. Didn't manage to break back above the swing high of 5th of April, and we've got lower highs. We've got the 16,445 level as the real, for me, the target, the level to be concerned about. If we break down below there, I think that will have a natural cascade of all the other indices. I think I've spent too much time on indices, Steve. Let's move on to commodities. Oil market, little bit of a reaction lower yesterday, and my gun to head challenge was to sell this, but I think I got stopped out, so that's a bit of a shame. However, we are seeing a little bit of a head and shoulders formation, not yet, well, potential, shall I say. Don't get carried away now. Left shoulder head and right shoulder looks to be formed. So we've got, for me, I would be more confident on this formation if we manage to get a break of this supportive line here, 63.80. So trading at 64.12 on the back foot, oil, and as Joe mentioned, the commodity's taken a little bit of a pressured move to the downside. if we do get a breaker there, if that's confirmed by a break of the neckline, the measured move target would be in and around the $61 level. So that would be a nice little trade to get on. So, but I'd prefer to see a break of 63.80 before getting carried away with that. Otherwise, 63.80 holds. Wouldn't be surprised to see a reaction higher, move higher back up towards the previous yearly highs, 66.70. Gold, it sort of hasn't really had the reaction that you would expect up with the, you know, a stock sell-off. Obviously, we sort of have a lot of the markets correlated, tied into each other, and sometimes even with a stock sell-off, we'll get people have to liquidate gold positions to support their portfolios. However, so for me, gold still looks pretty positive. We've hit the double bottom target and it's stalled around here. We've got a 61.8% Fibonacci retracement level at 1850, and for me the 1875 level is really the one that is capping things at the moment. So we need to see what the price action looks like around here before we can, the bulls can get carried away. So potential for a small pullback. I think dips will be bought, and if we manage to break above the 1845 level, then I expect the move higher to continue quite aggressively. Silver, a little bit of the same. Did read a piece yesterday saying silver is the most undervalued precious metal in the world ever. So I'm going to look into silver over the coming days and weeks in a little bit more detail and give full analysis on that. Copper isn't. That sort of like seems to be bubbling away, although we have had the sell-off and the reaction higher over the last 12 hours. So cryptocurrencies, have a quick roundup of there. Bitcoin, we're seeing this sort of topping pattern, which for me is still part of the ABC corrective move lower. I've got a level coming in around about really the 42,000 area for the real sort of like supportive area, 43,000 there. It's on that chart. Normally what you do is you do get the AB equals the CD. So that again, that targets a move down to 41,500 on the Bitcoin. I'm not saying it's going to happen anytime soon, but I think we'll definitely get further pressure if we do manage to break the 52,400 level, which has provided a couple of times it's provided decent support. So we are seeing higher lows. So until we start to break these lows, then it still feels like an asset to hold. But we all know what the cryptocurrencies, how they can react and how quickly these moves can occur. So for me, I'm negative on Bitcoin at the moment. So normally the other cryptocurrencies follow it. There's obviously some outliers there, but yeah, that's me. Sorry, Joe. Sorry, I just sort of seem to drivel on there.
No, it's fine. There was lots to talk about. So thank you very much for the roundup. Over to the gun to the head trades from yesterday. I thought you had a winner on oil because I didn't think anybody could have a stop that tight, but clearly you did. So we both got stopped out yesterday. I went long of euro sterling, which didn't work, and Steve went short of oil. So
it would have hit target as well. I was a bit gutted,
it would have smashed it, but
I think I was getting a bit greedy. I think I went for a 4 or 5 to 1, which if I'd have gone for a 2 to 1 like a normal human being, then I would have been all right. But obviously I'm not normal.
No, well, you know, we've got a gun to our head and you're under duress, so we make all sorts of crazy decisions when that's the case, I guess. Anyway, I'm going to have a look at FTSE today. You know, I think, yes, it looks a bit bearish in the short term. Steve was looking at this 4-hour chart, but, you know, the indices have come back time and time again, and these corrections appear to have been short-lived. So will this be the case again? I don't know. I mean, at some point, obviously, there is going to be a nasty move to the downside, but Will it be today? I don't know. Obviously, quite a lot of selling over the last few hours. This is the 4-hour chart. I've got a 78.6% fib level, this blue line here, which is taken from this swing low on the 4th of May to the highs that we just posted yesterday. And we've also got a trend line here, which you could argue is make 3 points. So we've got obviously the first touch here on the 25th of March, second one here on the 4th of May, and then we're hitting that today in conjunction with a 78.6% fib level. So yeah, I'm maybe catching a bit of a falling knife here, but you can make arguments for there being some reasonable supports on offer. So I'm going to buy it at 69.60. Just zoom into the hourly charts just to finesse the entries and the stops and targets. So stop, where am I going to go with that? I'm going to go 35 points. I mean, ideally you'd want it below this low, but down here we are breaking the trend line and below an 88.6% fib level. So that might be enough. And I'm going to target a bounce back to that low there from 9 o'clock last night. Oh, not that one, sorry, that one, which is at 7,065. So looking for 3R on that today. That's my trade of the day.
Nice.
What you got, Steve?
I'm going to go Bitcoin. Now, there's obviously two ways to sort of play this, and I'm going to go very aggressive, obviously, as per. Obviously, you've got this like supportive area here. So for me, there's two options. We get a break of this resistance that we haven't managed to break. That will confirm a double bottom here. A break of here, this level up here, would confirm a triple bottom, if we sort of take this one into account. But obviously the opposing trade is to sell it, which I've highlighted here, which is what I want to do. And then my stop would be above this 56,000 level. Selling it at 55,540. Gives me a 3.35 to 1 target in 54,000. Obviously, if we do get down here, I'd like to sort of give it a little bit more room because, for me, 53,000 is a bit of a another support area. Could give it another 1,000 points, but I won't get too greedy on this. So it comes in at 3.35 to 1.
What was your stop on that?
Stop on that was 56,000.
Lovely.
So that's what I'm going for. I'm going for the bear side of things today. Sorry, Bitcoin holders, but it's only temporary. You'll have your day.
Yeah. Okay, thanks, Steve. Okay, so data-wise today, got German ZEW at 10 a.m. We've got FOMC member John Williams' speech at 3:30, and we've got Brainard and also Raphael Bostic. So plenty going on the FOMC side of things. Again, I guess there'll be pressure on inflation, so we may see some headlines coming out with regards to that later on today. There's also an OPEC meeting at 12 o'clock today, so if you've got any interest in oil or oil-related products, keep an eye out for that. In terms of earnings, in Europe today we had E.ON, ThyssenKrupp and Ubisoft, and in the US we've got EA and Palantir, which is a Wall Street Bets favorite, apparently, one of the big US or one of the US stocks. They're reporting today as well.
Okay, cool.
Great. Okay, well, good luck, everybody, if you're trading, and we'll be back tomorrow morning.
Cheers, guys.
Have a good one. Bye-bye.